Hello, everyone, and welcome to another edition of Alt Talks. I'm very excited to be presenting today on how crypto is transforming money, finance, business, and beyond. This is a very exciting time in human history, I think, because financial services, which is really foundational to all industry and economic activity, is going through the greatest upheaval really since the invention of double-entry bookkeeping in the Middle Ages. Every aspect of the industry is about to change, from how we move and store value to how we access credit, invest, trade, transact, and even insure against risk. But this upheaval is about more, frankly, than changes to existing industries like banking or insurance. It's about enabling new business models and organizational capabilities that will transform existing industries, redefine the architecture of the firm and other institutions, change profoundly how we interact online with companies and with each other, how we consume culture, and will alter the fabric of daily life, reimagine the nature of work, and much more. At the root of all these upheavals are blockchains, which allow us to create new asset classes, business models, and governance systems for the digital age. Blockchains and crypto assets, which they enable, are really the first digital medium for value, just as the internet was the first digital medium for information. I am very excited about today's guests, and we're very fortunate to be joined by Ryan Selkis. Ryan is the co-founder and CEO of Messari, a leading crypto asset data and research company. Prior to founding Messari, he was an entrepreneur at residence at Consensus and was on the founding team at the Digital Currency Group, where he managed the firm's seed investing activity, and also CoinDesk, where he led the company's restructuring and annual Consensus conferences. He has been an investor and prolific writer in the crypto industry since 2013. He's also a must-follow on Twitter. I'm sure some of you already follow. His handle's @2BitIdiot. Great source of information and also inspiration on where this industry is going. Just a personal note on Messari. As everybody knows here, I run the Digital Currency Group at Ninepoint. I used to work in investment banking, and I used to have a Bloomberg terminal, and that Bloomberg terminal was always my second screen. Well, now my second screen is Messari. Messari is kind of like a Bloomberg terminal for crypto, but it's a lot more than that. It's like a bulge bracket research department, a news feed, data aggregator, and a lot more. And it comes in sort of various shapes and sizes. So Ryan's done a lot in the industry, including building this amazingly useful and powerful utility, which I think basically everyone in the industry uses. So Ryan, thank you very much for joining us.
Thank you for having me, and thanks for that nice introduction. That was pretty thorough. It's interesting. It's interesting that you started with the very meta description of the biggest innovation since double-entry bookkeeping, because not many people know this. This is one of our Easter eggs, but the name Messari actually comes from the merchants of Venice. The treasurers at the time were called the Messari, and it meant the trusted ones. So a good name for a information-focused business that's trying to develop some data standards, much like we saw out of 15th century bookkeepers that popularized accounting.
Yeah, well, the most important innovation in financial services up until blockchains was probably double-entry bookkeeping. I'm not sure what other industry where the most important innovation is 600 years old.
Exactly.
Maybe the printing press. So Ryan, why don't you tell us a little bit? We started Meta, but let's talk a little bit about yourself. You've been in the industry since 2013, which is a lot longer than a lot of other people. An OG in the parlance of crypto. So when did you first get into crypto? What exactly was it that drew you in?
So actually, first learned about Bitcoin in 2011 during the debt sequester in the U.S. For folks that remember that was the first time the U.S. debt had been downgraded by S&P, and basically it was in an environment not too different from what we see today, where there was gridlock in Congress, and there was essentially a hostage negotiation over a certain period of budget reconciliation, and ultimately. They were going to do, across the board spending cuts if they couldn't come to a resolution. Of course, they blew past the deadline. S&P downgraded the debt, and hilarity ensued. And at the time, I was only a couple of years out of college, and I started to think about ways to bet against the U.S. dollar as a reserve currency, because clearly there were no consequences for overspending and having really no solutions out of Congress. So I had the right thesis, and I played it the only way that you could have lost, I think, which was by shorting the treasuries, buying gold, and ignoring Bitcoin. And unfortunately, I ignored Bitcoin because I'm not a developer. So it was a little bit too technically complex, and it still seemed a little bit Wild West at that point, which is ironic because, of course, I got in 2013, and I think a lot of people would feel the same way about Bitcoin and crypto in 2013. I think that kind of initial exposure, and then the fact that I came back to it in 2013 after Fred Wilson had invested in Coinbase, after the Feds had shut down Silk Road, after the Winklevoss twins announced their ETF proposal, it was a little bit more credible, right? It was very early stage, but when you had the likes of Mark Andreessen and Fred Wilson and some other really smart fintech investors and internet investors come and say this is worth looking at and this is worth a bet, it made it easy for me to make my first purchase. Sure enough, the price went vertical within a couple of months after I made my first purchase of Bitcoin, and like a lot of people, greed was the gateway drug, and as soon as you start kind of peeling back the onion and figuring out exactly how this works, and doing diligence beyond just a speculative bet, everything kind of clicked into place, and then the rest is history. So I started writing full time basically within weeks of buying my first Bitcoin, and that at the time helped me get to know pretty much everybody that was building full time because the industry was so small. So that's how I got to DCG, CoinDesk, and in some way, shape, or form, I've been building information products since 2013 related to crypto.
Well, you mentioned at the time that you got into it, it was still pretty early stage, obviously. And I think, the market is much larger than it was then. And, we're seeing tons of adoption. But I think there are still a lot of people who are not familiar with crypto assets and with blockchain, and who are looking for useful and trustworthy information to help them become educated and become informed. And I think Messari is as a sort of an industry utility that serves that purpose. What was it that caused you to pivot from what you were doing and launch this company for this to be your big thing? And what do you consider as the mission or purpose of Messari?
Sure. The Ethereum crowd sale was mid 2014. The network went live a year later. So basically the first year that I was full time at Digital Currency Group, we were in a Bitcoin only world. Ripple was existed, Litecoin, and some of the other forks, but nothing of real substance, I'd say, aside from this promise of Ethereum. And so ultimately, the first few years between DCG and CoinDesk, it was really about building Bitcoin infrastructure and information infrastructure to the extent when I took over CoinDesk. So that summer in 2017, when I left, we were at an inflection point in the industry. It was during the middle of the ICO boom. And two things were obvious to me. One, things were wildly overvalued, and that there was going to be a significant correction. But the two, the fact that ICOs were even technically possible on Ethereum led you down the rabbit hole where you could reason and make a pretty good bet that these user-owned networks and this kind of fundraising and decentralized finance 1.0 mechanism that had been unveiled through ICOs, there was going to be some staying power there. And so if there was going to be staying power with ICOs, then some of these actual tokens and their networks were going to have some real value. You'd be able to value them like growth stocks, but in the form of cooperatives in terms of their ownership structures. And because they weren't necessarily companies, you were going to need some more advanced research and analytics tooling that would help communities basically build disclosures and kind of asset profiles and KPIs from first principles, just using these open ledgers and scraping publicly available information. Right. So that's where we started. We obviously have a number of quantitative data feeds and on-chain data feeds that power some of our dashboards. But a lot of what we've done is actually scrub project histories, key stakeholders, roadmaps, token economic structures, governance structures, and help people understand what's going on outside of the numbers, which can be very noisy. Ultimately, these networks are like startups. And so the highest signal events that you'll learn about are software releases or changes in a roadmap or some kind of key proposal that's been sourced from a community member that could be in a completely organic bottoms-up basis. That's where we spent a lot of our time, and now we think about Messari not only as a Bloomberg-like dashboard, but almost like a first principles Edgar plus the decentralized sell-side analyst community plus some of the data dashboarding tools you'd expect in a market intelligence suite. So I think there's different jumping off points from there for sure, but our broad mission is pretty ambitious to organize and curate all crypto information at global scale. So I think if that sounds a little bit familiar, it's Google's, but with crypto data as a particular focus, and that's obviously a never-ending challenge given how fast the space moves.
It's amazing that you mentioned Google, because I actually had that in my notes, which is their tagline is to organize the world's information. And I think of Messari as organizing the world's on-chain information, right? Because, and more, I know, but we'll get to that in a moment. I don't want to work, because I want to talk about the business. But you mentioned a couple things. ICOs. So I think a lot of people associate ICOs with a period in time where a lot of projects, flamed out and where a lot of money was lost. But I think that probably if you fast forward to where things are today, you can look back with a bit more of an unbiased and sort of even-keeled view, which is to say, like a lot of periods of growth with startups, a lot of projects did not pan out, and there were some less than honest actors. But actually, in the aggregate, a lot of the most exciting projects that exist today, the most widely used blockchains, had their origin during that period of time. And it's one of those things where I think people generally tend to overestimate the impact of the technology in the short term and underestimate it in the long run. After that bubble popped, it was, all these distributed applications and other use cases, maybe they're never going to pan out. And I think actually, if you'd asked even the most bullish people where they thought we would have been middle of 2021, I think we probably would have exceeded a lot of expectations. I think yeah.
And to that point, even when you were talking, I pulled it up. If you look at the some of the ICOs, even at the kind of height of the 2017 market, Chainlink did a $32 million ICO. It was $9 billion in market cap by the beginning of this year. Aave, it was an $18 million ICO. It's a $6 billion network now. Synthetics is a multi-billion-dollar network. That was a $30 million ICO. So, Uniswap didn't do an ICO, but they did a private placement with Paradigm, obviously, and their airdrop alone, they've catapulted into double-digit billions. So, even if you just look at a handful of the crop, if you take the cumulative amount that was invested in 2017, even with all the frauds and scams and whatnot, the multiple of money that you'd make if you just invested in everything in the aggregate is staggering.
Yeah, absolutely. I'm actually seeing questions coming in live, and someone asked to just clarify what an ICO is. So an ICO stands for initial coin offering. It's a bit of a misnomer, but basically it was a way for a project to issue a token to the market to raise capital. And Ryan's just referring to some of the more successful ones that have survived a period of growth and are now very, very large. I think the idea behind all of these different tokens and use cases, a lot of people question whether or not this is a distraction from Bitcoin. There are Bitcoin maximalists who believe that Bitcoin's the be-all and end-all, and that DeFi and distributed autonomous organizations and everything like that, are sort of not the main event. How do you think about that? I think of myself as someone who can be both bullish on Bitcoin in terms of its usefulness and its future growth, while also leaving room for other stuff. And I think that's probably where most people in this industry are most people have been around and seen a lot, are landing. I'm wondering where you think of yourself in that respect.
I actually like the reframing of crypto as Web3. And I think it's just more descriptive to think about, the Web3 movement and this user-owned economy is encompassing a few different sectors. I think in kind of the Web3 environment, you're going to have currencies. Those could be commodity currencies and digital gold equivalents like Bitcoin, some of the other meme coins, depending on your definition of some of the smart contract platforms. I would kind of put them in their own bucket, though. And then stable coins, right, in the same currency bucket. Then you've got the actual computing platforms. This is Ethereum, Solana, Polkadot, IBC with Atom and Osmo and some of the other Cosmos-specific ecosystems. And then you've got NFTs, which are like digital property rights and IP rights. You've got DeFi, which is the banking system and essentially the entire financial system that facilitates swaps of these digitally native assets. And then you've got the decentralized infrastructure layer, right? So this is your decentralized storage, sensor networks, video, transcoding, the like. And all of these are going to be valued differently. You might think about decentralized hardware either as a combination of capital asset or representing some scarce computing resources that are essentially financialized and tradable using a token. With NFTs, yes, there's a lot of mimetic value, but really NFTs are just wrappers of different types of intellectual property, discrete intellectual property that can be kind of quantized and traded across these interoperable chains. And then I think DAOs are kind of just the governance mechanisms and tooling that connects everything, and it's basically the rules of companies and governments, if you will, in this virtual frontier. So every single one of those, I think, is interesting in its own rights. I don't understand how people could have gotten excited about Bitcoin and then never gotten excited about anything else, and they're still kind of locked in that maximalist mindset. At the same time, I don't really understand people that have this thesis that Ethereum is going to be the winning capital asset, the winning money, the winning computing platform, and basically everything is going to roll up into Ethereum when clearly there's evidence to the contrary now, and it's more likely that we're going to have different interoperable technologies for different use cases. So I think we may have just in the last year kind of hit an inflection point where people actually, at least the smart money and all the crypto funds that have entered the space, they're starting to get a little bit more thoughtful about how these different assets are priced and whether they're valued or priced, right? The whole thing like currencies and memes are priced, capital assets are valued because you have traditional frameworks at work. If there's a certain amount of fees that go through a given network, you can think about it almost like maybe not a public company stock, but like a mutual or a cooperative. I think there's both the data at hand and the infrastructure to actually parse this information at hand between folks like us and Nansen and Coinmetrics and some of our other partners. And then there's just the mind share and kind of the mental bandwidth from smart money to kind of peel back the onion and understand like what the differences are between these different ecosystems. So I think it's a slow process, but if you look just cycle over cycle, the level of sophistication in terms of how we think about these networks and their intrinsic value versus where we were in 2017, it's a slight change to say the least.
Yeah, absolutely. Well, for us at Ninepoint Partners, we launched a digital asset group. We didn't launch a Bitcoin group because we obviously see that there's a lot of potential for investors in this industry as a whole. And I also do like the Web3 moniker as a way to describe basically a world where, individuals can own digital goods and take them with them between different online environments, and where you can own your identity and use that as a way to access, services, including financial services, without sharing your information with dozens of different parties and more. And I think about the analogy I like to use is the parable of the blind man and the elephant. It's something I actually heard originally from Balaji, who's been around in this space for a long time, where he says, when it came to Bitcoin at the beginning, it was like the blind man and the elephant. There's 5 people standing around with blindfolds. One's touching the leg and says it feels like the trunk of a tree. Another one's touching the tail and says it feels like a rope, et cetera, et cetera. And I think that What's happened in the last couple of years, this inflection point maybe is a lifting of the veil, where we're able to see actually more clearly what Bitcoin is and what it could be, but also what the whole industry is capable of. And you mentioned Ethereum too. Again, these people who are maximalists around certain things, I think miss a bigger point, right? So with Ethereum, our analysis, and I think we got this from DeFi Llama, was 99% of DeFi was on Ethereum in January. And today it's 70% in terms of TVL users and so forth. Does that mean that Ethereum is losing, or that it is, becoming less relevant? Or is it a sign that there's obviously so much demand from users and developers for blockchain infrastructure that it's sort of spreading like a wildfire, right, to other different protocols? In the 1600s, the Dutch stock exchange was set up to trade the Dutch East India Company. It was 100% of the market, right? And over time, new shares got listed, and its percentage of the float of the exchange declined, but the company itself grew enormously over the next 4 centuries, right? And sort of, to me, I think about crypto assets similarly, which is that we're not fighting over a fixed pie. This is a growing pie. And more importantly, to your point, these assets do different things. They exist for different reasons, different kinds of applications. So thank you for making that so clear. I want to switch just back to Messari for a second. You recently closed a big financing round from Point72. And when I was an institutional equity salesperson, I actually covered their predecessor, SAC. Steve Cohen, for people who are on the line who may not know, is one of the most legendary Wall Street traders ever, and obviously one of the most successful, and someone who, is synonymous with that world. And yet here they are investing in something in crypto. So I'm curious, a couple of things. One is, what was it? Why do you think they were interested? Like, what was it about Messari that made it their first bet? And then more generally, where's Wall Street at with this whole thing? Are they behind the curve? Are they adopting blockchain crypto assets? How do they fit in all this?
Well, I'll give a little bit more insight into kind of the direction that we're heading as a company to help answer that. So I think everybody knows Messari for this kind of enterprise research and data front end that we've built, right? I think that's the core of the business. It's grown very quickly, and we see more institutional demand for intelligent solutions just to help them kind of come up the learning curve beyond just Bitcoin and Ethereum. And our thesis for a long time was it's going to take a while for entities to get beyond Bitcoin and Ethereum. But then when they do, it kind of opens up the floodgates. And it's one thing to understand Bitcoin. It's another thing to bring Ethereum to your investment committee, your compliance team. It's a whole different story to go and say, actually, this is an entire emerging ecosystem of hundreds of protocols and assets, because that's when you're going to really start to scare people. And that's when you need, even if you got the best team in the world internally at one of these banks or large investors, you're going to need checks on your work, and you're going to need other third-party tools, the same way that you use Bloomberg and S&P and FactSet. And it's not necessarily mutually exclusive in terms of which of those enterprise licenses you have if you're a regulated financial player. I think the same is going to be true in crypto, and we have seen the surge in demand for our tools over the course of the last 6 to 12 months, kind of right as expected. As the rest of the ecosystem has taken off, and people are trying to get smart on where the opportunities are beyond just kind of passive speculating. We're one of the first places that they turn, and there's a handful of really good research companies. We've all got our different kind of shades of gray and kind of how we tackle this challenge set. But we've just seen exploding demand from more traditional, financial firms and groups that are trying to get deeply involved and comfortable with actually tying themselves to a Web3 protocol, whether that's for investment purposes or some type of technical integration. The other half of the syndicate, though, was basically the who's who in crypto, right? So it was Coinbase, Kraken, blockchain.com, Gemini, basically all of the major Western regulated entities, and then a few of the really good DeFi investors, CMS Holdings, Nascent, and others. And they're kind of excited about the other half of the business, which is a little bit under the radar right now, but I think will be more in focus in 2022. That is basically, DAOs. If you think about the future of work and the future of the economy, if it's going to be structured as DAOs versus centralized companies and centralized hierarchies, then you need to get about 10 to 100 times better in terms of information flow among these like distributed groups of people that are trying to coordinate on scaling some protocol. The functions don't necessarily change though, right? So you're going to need investor relations and marketing and business development and product chops and obviously technical development and the like. How you actually coordinate those groups and how you do that in a decentralized manner, it's really a new information challenge, and you're really trying to kind of build the connective tissue of decentralized organization versus a hierarchy. Mm-hmm. We have like operating systems and internal dashboards for centralized companies, but those things don't really exist for decentralized organizations when it comes to governance, workflow management, and just kind of talent identification and placement. Those are all the things that we're kind of doing on the other half of the business around tracking up project-specific updates in governance and kind of the technical roadmaps, and then helping users understand where they might actually be able to get involved for like earnings opportunities, either on a bounty basis or different user awards. I think probably the most exciting part of the business is that we're in top of the first inning on.
Well, I think that's obviously we're a lot of Canadians on this call. So, the old Gretzky quote about don't skate to where the puck is, skate to where the puck is going. Thinking about providing services to DAOs when I think most people probably don't even know what those are is definitely skating towards where the puck is going. And actually, I think I'm just going to take a step back to kind of, explain briefly for the folks who aren't familiar. A DAO stands for Distributed Autonomous Organization, and it's basically a way to coordinate the movement of people and assets in a decentralized manner. So a lot of DeFi protocols, decentralized finance, reward early users and early adopters with tokens. And those tokens confer certain rights to the holders, including the right to vote on matters of governance. So in the traditional corporate structure, you might be a shareholder who has the right to vote on certain matters at annual general meetings and so forth. There are some similarities to how DAO governance works. However, these are not traditional structures and hierarchies where you've got a head office and a management team and a CEO and a board of directors. They are decentralized, where token holders have a lot of the power and a lot of the vested economic interest as well. And so this may sound sort of theoretical, but in fact, it isn't. There are 10 different DAOs that have treasuries in excess of $1 billion. And that's either because of the growth of their own native token or increasingly because the protocols themselves are earning revenue from adoption and from users. So these are becoming increasingly powerful organizations in the crypto economy, but as a model for coordinating and creating value, I think they're going to become more important in other industries as well. Ryan, is that kind of a fair overview, you think?
Yeah, I mean, just in a nutshell, DAO is basically just a shared wallet where decisions are made based on your pro rata ownership of that wallet and its resources. So if you think about it like that and then kind of scale it up, I mean, that's what a company is essentially, right? The board of directors will hire the management team. They're responsible for allocating budget to different functions. Different managers have different budgets that they're able to allocate to full-time and kind of variable spend. And you're ultimately accountable for different deliverables associated with growth and expected to have a return on that investment. I don't think, and if you're taking the other view, like the nonprofit view, you still have to drive outcomes, right? And so DAOs are basically the same mechanism, but just in code and with kind of infinite design space right now versus like 4 or 5 different tax designations, like this is a 501c3 or a C6, or this is an LLC or a partnership or C corp. I think the ability for people to build these kind of supranational organizations that look and feel a little bit different, but execute the same type of function as a centralized company, it's really unlimited. So the DeFi applications, the kind of crypto networks that you see today are going to be some of the first incarnations, but you're going to be able to do that in micro and macro if you're thinking about these as just shared wallets.
Well, that's a nice, elegant description. You mentioned Wall Street is looking at this both as an investment area, but also as a way to integrate into their business. What do you think is taking priority right now?
Well, I think we're in a pretty frothy environment, and there's money to be made. So it's first and foremost financial interest in nature, but I think we're seeing big tech companies kind of come into the fold as well. Whether you're talking about DAO infrastructure or like NFT infrastructure and kind of ways that they might be able to leverage some of those primitives. I think regulated businesses are staying away from DeFi right now because of the securities law elements and kind of the regulatory issues that they entail. But there's a lot beyond that I think is exciting to incumbents. Gaming, another big area, right? Like play to earn games, I think is going to be transformative for the gaming sector, which is $120 billion a year industry. So I think they're all going to have slightly different information needs, and our goal is to kind of build broadly for now, and then ultimately offer sector specific solutions over time as we and the industry continues to grow and mature.
Yeah, I think about the first era of the internet and how a lot of leaders of the old paradigm, the old information economy, had a hard time embracing the internet. And like the most obvious example of this would be maybe Blockbuster and Netflix. And I wonder, with traditional financial services companies, do they see an opportunity to make money on a hot new asset class, or do they truly realize that maybe they're standing on a burning platform where the threat of staying put is actually riskier than the threat of taking that leap into the unknown? And I do wonder about a lot of business units within traditional finance. Obviously, there's value add to what the industry does, but a lot of it is rent-seeking behavior and fee-taking because of their historical legacy place in the value chain. So I think the jury's kind of out on that. And I wouldn't mind switching into DeFi, though. This is an area that I can see we have a lot of questions about from the audience. So maybe to start, how do you define DeFi? And what is let's just pick one exciting area that you're paying attention to.
I think decentralized finance is really anything around the core areas of finance. So that's anything from exchange, lending, insurance, derivatives, kind of capital markets, asset issuance and creation, and then asset management. So I think it really is kind of cover to cover, covering the 6 or 7 major areas that the incumbents make money. And we have kind of blue chip assets and iterative improvements in every single one of those areas of DeFi, even in the last year, right? So Compound, Aave, and MakerDAO are starting to see real kind of legacy finance interest in this whole concept of like CDFI, centralized meets decentralized finance. You're starting to see more integrations with like regulated centralized entities and market makers and capital providers actually integrating with these decentralized finance protocols. And then I think that's happening kind of across those different functional areas that I mentioned. But you have kind of the split between protocols that are professionalizing and getting a little bit better integrated into the regulated financial system, and then you have the real like Wild West, like digital native finance solutions, like those that are trying to create a Web3 independent stablecoin, for instance, right? So like Ohm and some of these other kind of new and up and coming projects. So I still think there's you got to remember we're only 18 months into DeFi, really, for all intents and purposes. I would argue that everything, there was basically DeFi alpha, and then I'd say like the beta launch was Compound's introduction of yield farming, because that really kind of opened the doors and created the environment where everybody began to think about liquidity mining and user incentives as a integral part of their scaling plans and how they would actually solve this cold start problem when it comes to attracting early capital. Because in the kind of the pre-compound and pre-yield farming days, the question was, why would you ever pick up pennies in front of a steamroller? There's all this technical risk. There's very large spreads on different assets that you want to trade, or lending just prohibitively expensive, and you're taking all this counterparty risk with protocols that really don't have any liquidity. Yield farming solved all that because it actually paid people to make the market early, even if those rewards dissipated over time. So I think that is now kind of table stakes for any protocol that's going to launch. How do you think about like attracting capital and rewarding early participants in your ecosystem? And now that model has more or less been proven out, it's just a matter of figuring out like who the best teams are and who's going to win the best distribution.
Well, I think there's a couple of really key innovations in all of that. One is, the returns are generally higher the newer the project, which is true for any kind of, emerging market, for example, or any kind of, loan that you might place to subprime lender. If they're unproven, then maybe the returns are higher. But it also means that by being an early contributor to one of these protocols, you become a stakeholder as well, with vested economic interest and the ability to decide how that shared wallet is allocated. And that creates a community as well of users. And I think it's incredible. I edited and wrote a foreword to a book called Financial Services Revolution. And I think it was the first book that had the word DeFi in it. And I put a chart in there looking at the total value locked, basically, the assets within DeFi. And combined, the entire market was $400 million. And this wasn't that long ago. I think we put a pin in that data set in October of 2019, so maybe 2 years ago. And today, the value is obviously much greater than that. TVL is not a metric that is totally accurate or totally authoritative, but at least today it's around $200 billion. So we've seen how quickly that area has grown. I just see it's 1:40 here, and I know we've got tons of questions from the audience. There are a lot of people here, Ryan, who care about Bitcoin and Ether. They're the two things that are the most easy to invest in the public markets here in Canada. What is your view on Bitcoin today? I think people like to know.
Well, I mean, I'm still a Bitcoin holder. I don't really anticipate that's going to change anytime soon. Like I said, I think there might be other higher beta plays, higher upside plays for investors right now. But in a lot of ways, I kind of view Bitcoin as my savings account, and every other protocols as more active investing accounts, all the way through kind of like angel investing. But I think I'll be a long time holder of Bitcoin.
And Ethereum?
Yeah. Mm-hmm.
Yeah. Positive.
I own a bunch of these assets. So
yeah,
I don't own many non-crypto assets at this point.
Right, except for your biggest asset, which is your business. I'm guessing, but
well,
okay.
I mean that's a derivative of a crypto asset, I guess.
Yes, it's your Texas hedged. between Messari and your crypto portfolio. Some other questions here. There's a couple folks asking. You mentioned you briefly referred to DeFi and regulations and some of the uncertainty around there, but you've actually been pretty vocal in your opinions on regulations, the wrong way to do it, the right way to do it. Do you mind maybe sharing that your perspective on that with the audience here today?
Well, I generally think that regulators and policymakers shouldn't overregulate things that they don't understand, that are growing as fast as crypto, and that ultimately have as much potential to keep the U.S. in particular in the lead when it comes to financial services. So I know you're Canadian. I know there might be some folks here from Europe, but the dollar is still the reserve currency of the world, dominant reserve. China shot itself in the foot, I think, with the basic blacklisting of a lot of crypto trading and investment activity outside of their centralized version. So this is really kind of ours to lose. And unfortunately, some of the folks that have come into the regulatory state more recently essentially want to exercise full control over the crypto spot markets and regulate all these kind of up and coming networks and their assets as if they're securities. So, if you're power hungry and you want to make a name for yourself, I think that's, you can certainly make arguments as to why these should all be regulated as securities. Because people are investing in them, speculating and hoping for a future return. But I think what's been really disappointing is, there's very little common sense or judiciousness that's ever applied to regulatory decisions these days. And there's actually a very fair and I think forward-thinking proposal out of SEC Commissioner Peirce to introduce and start iterating on a safe harbor, which kind of gives you the best of both worlds. It kind of fulfills the SEC's mission to protect investors through a disclosures-based regime, but it rethinks what those disclosures should look like to account for the fact that these aren't necessarily top-down command and control structures versus these decentralized communities that are going to be able to essentially aggregate information without an executive team or a CFO or like an internal accounting team preparing these filings. And we more or less prove that with the entire research model that we have at Messari. And in fact, this week we published a report on Compound and just did a webinar yesterday with Rob Leschner from Compound Labs, who had zero input into the actual creation of this report, but it was a quarterly report, much like you'd expect to see during like an earnings release for a public company. The key difference was this was done all through like on-chain information and publicly available information from someone that does not work on the protocol, Ryan Watkins on our team. And it was modularized in a way that should be easy to replicate for any analyst if they just know what the right pieces are and what the kind of standard way to present this information is. So that could and should very well be like the safe harbor and the data that's available for crypto networks. I think it's a long shot that we're going to actually see that, but I think that's the most common sense way to do this. And unfortunately, that might be an uphill battle for the next couple of years until we have at least a change in control in Congress.
Yeah, people ask me why the U.S. is the leader, and I always say it's in spite of the regulations and the government, not because of the regulations and the government. And in fact, I think that that's an arbitrage opportunity for smaller markets that maybe don't have the same, everything that the U.S. has, capital, people, tech, and so forth, like Canada. And our securities regulator has been really open-minded and has approved physical Bitcoin ETFs, which collectively have billions of dollars of assets under management, have been trading without any issues since February of this year, and have basically zero tracking error, all within 50 basis points of the underlying asset with no hidden fees that you see in futures. So I do, at least for now, that's kind of useful, I guess, for Canada, because it means that we're the only game in town. But I think long term, it would be a lot better for investors if there was a physical Bitcoin ETF approved in the US as well.
Yeah, I mean,
Wondering if you
that's
have
just
thoughts on that. I know you do, so I'm hoping you could share them.
yeah. I mean, my thoughts are pretty basic. I mean, at some point, it's like Grandpa Simpson yelling at the clouds, right? So like nothing is really going to change. Like, Chair Gensler is not going to turn on a dime and suddenly become reasonable, less power hungry, more like technically progressive leader of the SEC. I mean, like he is who he is. It's not going to change. And the only thing that's going to change, I think, is the Biden administration is ultimately going to cede progressively more authority when it comes to their crypto policies to the SEC. And to a lesser extent Treasury, but I think even Treasury is delegating a lot to the SEC. And so, that's frustrating just because I don't think that the SEC has shown good judgment, forward thinking, or competence at any point in the last 6 years. So, I mean, there's no other way to put it than that. It's and the case in point from the last couple of weeks is the introduction of the futures-based ETFs, which I know you're alluding to my tweets and indignation at the fact that we have products that have hidden fees of about 10% per year potentially, thanks to the structure of the underlying products and contract role, and we do have a physical spot-based. Could be ETF that has been operating and available to public markets investors for 5 years now in the grayscale products. And that isn't really being seriously considered, basically because it's a hostage negotiation where Chair Gensler is not going to approve it just on principle until the spot markets are completely under the jurisdiction of the SEC. So that's not going to happen. And in the process, because of this, I think, multi-year hostage standoff that we're going to have with the SEC, retail investors are going to suffer to the tune of billions of dollars per year. So, the SEC's mandate is to promote capital formation. They failed from the time that, the ETF was first introduced to the time that it was actually, the inferior version was approved last week. There was $1 trillion worth of market value that was generated. And about 600 times growth. So the SEC failed in that regard to promote capital formation. Their goal is to promote fair and efficient markets. These are fair markets only insofar as Wall Street is able to get its 10% rake on the back of retail investors that are going to be speculating on these vehicles. And then their kind of third mandate is to protect investors, and they're just provably not anywhere along the in any of their existing policies. It's one thing to go after fraud and abuse. It's another to kind of pursue the entire industry with a broad brush and enforce, kind of regulate through enforcement actions and ultimately not solve any of the root cause issues when there are ways to do that, pretty much immediately. And one of the solutions that's been most thoughtful and has been on the table for a couple of years has not been seriously entertained or even addressed by the chair. And in fact, I think that he tried to lie to Congress when he was in front of the Banking Committee a couple of weeks ago by a nice little misdirection in his answer about whether he had actually reviewed the safe harbor proposal. And if you go back and you look at the video, you'll see Rep. McHenry, who's the chair of that committee, actually caught him in it. So that's who we're up against. I don't, I'm not running a regulated business, so I can tell the truth and what I think all of our customers are feeling, that this isn't an honest administration or regulatory set of leaders that we're dealing with, and it's going to be a battle. So we accept it, and we keep doing the work to build the foundation.
Well, I think you're doing important work for the industry, that's for sure. And I know that you're maybe because of your unique position, your ability to speak truth to power, or to shine light on things that you think are incorrect, I think is really useful. So one of the things that you mentioned is that the U.S. is the leader today in this industry, and I think that that's obviously true. And I think one of the reasons is China shot itself in the foot, but the other reason is it's the U.S. Now, in the first era of the internet, or Web 1 and 2, however you want to describe it, the U.S. companies became the most valuable. The industry was effectively located in the United States. For Web 3, I wonder, do you think that is going to be the case? And there's a couple things to consider. One is the fact that because we're dealing with assets, there are opportunities for the regulatory arbitrage. But I think maybe the bigger reason is what you were describing about DAOs, which is that we can do things in a decentralized manner, so does place even matter as much as it did before? In other words, who's going to win in the Web3 battle, essentially?
I think the whole the environment that we're living in right now, where everyone is kind of distributed because of COVID anyway, and that remote work model has become a necessity, and people are starting to get used to it, and so it's not a liability anymore to have a distributed team. You're much more physically capable of exploiting these different regulatory arbitrage opportunities, and you see this already with people moving to Florida and Texas for tax reasons. You're starting to see it more from a regulatory standpoint with companies moving out of New York City, even if they just moved to the other side of the Hudson, to Hoboken. You're seeing it with people that will establish a nexus in Wyoming or Puerto Rico, or start to think about like international hubs for their teams. And I think at the end of the day, that's a process that's only just starting. Quite frankly, I think that's going to continue to pick up steam. And the question is, how much is the U.S. or any country really going to try to kind of claim jurisdiction over parts of the metaverse, and where is that kind of virtual land? And you have a hint of how these politicians think about this, because if you remember when Elon Musk was making the joke that Dogecoin was going to be the currency of Mars, you had American politicians that were, well, let's say that it was serious. I think the point was, if I go to Mars and I settle Mars, I can do whatever I want. And there were some politicians that were seriously even elevating the question of should a person or a company have jurisdiction over another planet, or should they be like subject to the rules of like Mother Earth and whatever government basically like launched the rocket ship. I mean, it's crazy stuff, but it kind of shows that even if more of our economic activity moves into these decentralized worlds and like the metaverse, you're still going to have the global regulators and kind of tax authorities and governments around the world that are basically trying to intrude and claim jurisdiction. And this is maybe the most important trend that I think we're going to see in the next couple of years, which is these kind of virtual frontiers are probably going to be the battlegrounds of the next decade. They look like games today, but if they're run by companies like Facebook, then you're going to get like a W-2 and a 1099 from Facebook every year for all of your activity in their metaverse, versus if that's done in a kind of decentralized way, and you're just interfacing purely in these markets. Basically, where is your physical nexus if all of your like economic activity is in this virtual world? It sounds crazy, but I think that's kind of where we're heading, and that's some of the more important infrastructure that's getting built now.
Well, I think that there's a greater potential for the metaverse, which, I mean, everyone's got a different definition for it, but sort of an immersive online environment where you control your own identity and digital assets and so forth, so on and so forth. I think it's probably more likely to be decentralized than owned by Facebook, at least. That's one silver lining. We saw what happened with Libra and later Diem. which is that they received a very rough reception in Congress. But the funny thing, at least to me, was that people didn't take issue with the crypto part of it. They took issue with the Facebook part of it. And Facebook's this, they say there's no bipartisanship in DC. One thing is able to unite the right and the left, and that is a hatred of Facebook. I think that, putting aside the comment about how it'll be governed and regulated, different question. I think at the very least, we're seeing some really interesting new projects that are innovating in that space. And I think those are the ones that are likely to succeed. That would be my opinion on that. I see that we're kind of winding down here. So we've talked about some of the risks, obviously, of what could occur in the next few years. But let's talk about the opportunities. So putting aside what the battle lines are going to be for the next decade, what do you see as the potential? If we're having this conversation, let's not say 10 years, because who knows what can happen in a decade, but a couple years out, Ryan, what is the size of the crypto asset market? How are these protocols being used? What do you see as the opportunity a couple years out?
I've been in crypto for 8 years, which is 2 full cycles, and I'll probably be here till the bitter end, which hopefully it outlives me. But I think if you look back at the historical Bitcoin chart, it's probably a good way to kind of frame this conversation. And you look since 2011, the last bubble in 2017, it looks like a little bit of a gyration, but it doesn't really look as catastrophic as it felt in late 2018 when we were down 85%, right? And we're kind of building during that trough and kind of waiting for the next cycle. If you look to 2013, what was an even more aggressive spike from low double digits to over 1,000 within a single calendar year, that blip is barely even perceptible. So, to your kind of initial point about, we overestimate things in the short term, underestimate them in the long term. That's kind of how I think about this in kind of the 10-year cycle. And, in terms of market cap, I personally think that we could be on the cusp of a .com style boom. We have all the tailwinds in place. The only thing really that I think that would slow it down is a rapid hike in interest rates, where all risk assets kind of get penalized, or some combination of a pretty significant regulatory crackdown on DeFi. But short of that, I mean, I don't think there's any reason that we can see a similar size boom in kind of crypto assets across the board as we saw in the .com boom. And just for a little bit of context, and if you're kind of doing an apples to apples comparison just of the dollars in the system then and now, that would make this crypto bubble, if that's where we end up, about $20 trillion, $25 trillion, someone in there, to just to get on par with how crazy the .com boom was. I don't think that that's outside of the realm of possibility, which would be 10 times larger than the market is right now. I don't think that's necessarily straight lined across all the assets here, but I mean, you'd still be talking about a $500,000 Bitcoin, a $50,000 ETH, a $2,000 Solana, at least. So I think I am not necessarily banking on the fact that it's going to be a straight shot up like that, but it's possible. And in the meantime, there's such a staggering amount of capital that's in the sidelines, ready to come into new projects, and just such a staggering amount of capital that's in the war chests of all of the major incumbents within crypto, that 2013 to 2015, there were some pretty major companies that almost died. 2017 to 2019, I think there was some that washed out, but I don't think any of the majors were really on the brink of collapse. I think in this next cycle, there's going to be a lot of learned resilience. So the pace of innovation is not really going to slow so much as maybe the hyperbole and the speculative furor will abate once we kind of hit that consolidation period. But I don't really think about it because I just know that I'm going to be in this market for the next 10, 15, 20 years building. So everything in the middle just kind of looks like those earlier blips 10 years out.
Well, that's for sure. You're not a tourist. You're a settler. You're a pioneer. So you're going to be there come hell or high water, I guess. I think that the prediction's useful, but there's a saying that the future is not something to be predicted; it's something to be achieved. And I think that's really important to think about. You're a business builder. You're building something not for the next 6 months of whatever the prices do, but for what you think the technology can do to change the world, right? And I think that's really important. And I also think, there's nothing so powerful as an idea whose time has come, to paraphrase Victor Hugo. And I can't help but feel like I haven't lived through as many cycles as you, but things are real now, whereas maybe earlier we were betting on future potential. And so I feel like the substance and the growth of the industry feels much more durable today. We're over time. This has been an amazing discussion. On behalf of Ninepoint Partners and the Digital Asset Group, I'd like to thank all of you for joining today. And I'd like to thank Ryan as well. It's been a great discussion, Ryan. I know you're one of the busiest people out there, and we so appreciate you coming to share your thoughts with us. Just a couple things before we head out. I've seen a lot of questions from people asking, can you go into DAOs? What's DeFi? Compound, all these different sort of ideas to expound on them further. A couple of resources. Ninepoint Partners has a podcast, DeFi Decoded, which you can find anywhere you get your podcast, but we can also find it on our YouTube channel. So I'd encourage you to subscribe to that. Also, I would encourage you to follow Ninepoint Digital on Twitter, and of course, to follow Messari at Messari, and to follow Ryan at 2BitIdiot. I don't know about that Twitter handle, Ryan. I guess it's here to stay. This has been a great discussion, and I'd like to just thank you again so much for taking the time. And thank you everybody as well. And just one final thing is there will be a replay available. A couple of people have asked about that as well. So we will make that available to you to be able to see this again, because I'm sure there's more to glean from what we've already said. So with that, I will say thank you again, Ryan. Thanks everyone for joining, and have a great afternoon.
Thank you. Have a good one.